What are analysts saying about the prospects for HKEX's contracts to gain traction?
Yeah, it's an exciting day because Singapore has had a monopoly on this market of offshore A-shares derivatives since 2006 when their products were launched, and Hong Kong, which is its biggest rival, is finally launching this today. Analysts think it's going to take a while for the products to gain traction, so a few years, but eventually to have some meaningful contribution to Hong Kong's revenues by 2025.
Are there any concerns?
Yeah, I think the biggest concern that analysts have pointed out is that the underlying index, which was constructed by MSCI, uses a number of methods to balance out the sector weightings to give investors a more diversified exposure. So while it is diversified, what it can lead to as well is higher index turnover, and that can lead to higher trading costs and fees for clients that are using the futures contracts, and that is perhaps the biggest concern. On top of that, Singapore has fewer holidays than Hong Kong does, and it also has a better established derivatives ecosystem, which has better liquidity. So these are the main concerns as we head into trading for Hong Kong.
We saw the Singaporean bourse's stock slump on the news about Hong Kong. Are investors worried valid right now? Should Singapore be worried about the competition?
So these products contribute about 10 to 13% of revenues based on analyst estimates for Singapore Exchange. Hence the big slump in the stock when Hong Kong announced their product, which is direct competition. There is definitely concern at this point, considering how big Hong Kong exchange is, about how much that will eat into Singapore's revenue. But the exchange, the Singapore exchange, that it seems pretty comfortable. They are very wary of the competition, but they seem comfortable in their product because it's very similar to what Hong Kong has launched. So they're comfortable that clients are going to stay with them at this point.